The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Friday, TGIF. Welcome to another edition of Breakout Investing on TFNN, 877-927-6648. Toll free, give me a call. Let's talk about this market. My show airs every day on TFNN from 3 to 4 Eastern. I am the warm-up act for the Tom O'Brien Show, 4 to 6 Eastern on TFNN. You can get my show as a podcast on iTunes if you can't listen live, and there are some other pretty cool apps in the iPhone App Store that you can download the podcast there as well. Don't forget you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi, and you can listen to the stream that way as well. Just open your smartphone browser, type in tfnn.mobi. I'll be going over charts as I always do, just to provide some visuals for the show. If you want to look at those charts live right along with me, you can use Tiger TV to do that. Tiger TV is viewable on your handheld device. It is also available on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived in Channel 13. All right, checking in on the markets here. We're talking about this resistance level for the S&P 500, which would be 1421 thereabouts, and right now the S&P is at 1412, so it's about 9 points underneath its 50-day moving average. It hit an intraday, high of 1417, about 4 points below its 50-day moving average, but it is trading near its session low right now. Not a whole lot of volume on the New York Stock Exchange today, tracking about 10 to 15% lighter than what we saw yesterday, which was pretty much average at 678 million shares. So pretty light volume on the New York Stock Exchange. Taking a look at the NASDAQ Composite, well, volume here is light, but it seems to be picking up the pace a little bit. So still tracking about 5% lower than what we saw Thursday, which was pretty much average at 1.73 billion shares, so tracking a little bit lower than that today. NASDAQ Composite, just like the S&P 500, near its session low here, but trading in a pretty tight range, down a little more than 10 points to 3,001, almost 3,002, so still trying to hold on to that 3,000 area. And the Dow Jones Industrial Average, 13,000 is... you can see the Dow right now is below that 13,000 level, last trading at 12,992, down almost 30 points on the day. So we've got some sellers in the market today, but overall fairly well contained are the losses, and it doesn't seem like we've got a lot of juice behind the downward move today. So like I've been saying, going forward, we're in a nascent uptrend here. We had a very mild buy signal from the market 1 week ago to the day on Friday, day after Thanksgiving. It was calling it a mild buy signal may even be giving it too much credit, but it was a big percentage gains, and so we have to pay attention to that. The trend is upward for now, and that's the most important thing. We did get a higher volume decline, what Investors Business Daily calls a distribution day, earlier this week on Tuesday, and when you see higher volume declines so soon after a buy signal, it sometimes can be problematic for a rally. But we've been talking about at least with the S&P 500 and the NASDAQ Composite, the 50-day moving average potentially being a short-term resistance level for both of these indices, but doesn't mean that if it finds initial resistance, it's doomed to head lower. It could just be a quick low-volume pullback, and then more buyers come into the market. So we have to be open to that possibility. And we'll see how it shakes out. Folks, don't forget during the holidays, TFNN does a Tiger Dollars promotion. You could use Tiger Dollars to save a lot of money buying newsletters and things like that at tfnn.com. But if you sign up by December 19th, you'll get a 25% bonus match on any amount of Tiger dollars you purchase over $500. And if you do purchase Tiger dollars, we'll donate up to 10% of your purchase price to the Salvation Army. So you can check out all the details on the homepage of TFNN.com. While you're there, you can check out 30 days free of my newsletter, Ultimate Growth Stocks. I've been nibbling on some long positions over the past 7 to 10 days or so, and nothing too drastic, just kind of dipping my toe in the water, testing the waters. Not convinced that we're ready to move meaningfully higher here, but again, also recognize that we did get a buy signal. As mild as it was, it does make sense to just nibble at some longs and see how they work out. Yield on the 10-year note today down slightly to 1.61%. Not much movement in the 30-year bond yield, pretty much unchanged at 2.8%. U.S. dollar index down, but not by much, down 6 ticks to 80.15. Haven't looked at a chart of the dollar index. Let's take a look and see what that looks like here. And yeah, it's in a downtrend. You can pretty much see that. The 200-day moving average is at 80.77. So that is a potential resistance level here. But the U.S. dollar index right now trading at 80.15, so 80.77 looks like near-term resistance. Support is at 80.11. 80.11, and that is pretty much where it's trading right now, where it's been the past 4 trading sessions. So you can see here just firming up past 4 trading sessions right at its 50-day moving average. But dollar really not showing any signs that it's ready to meaningfully head higher here. Of course, the market does like a weak dollar, so if you're a bull, we don't want to see the dollar gain meaningful traction from here. Taking a look at gold today, February gold, the most active contract now, lost $16.80. 1% decline for gold, settled at $1,712.70 an ounce. For the week, gold lost 2.3%. Check in on the Spider Gold Trust, and we'll see that, I'll tell you what, on Friday, right? Friday was when the market rallied on that half session. We had 1.3, 1.4% gains in the major averages. The GLD spiked above its 50-day moving average, an area that I thought would be resistance, but it closed above the line, and then look what it's done the past 5 trading sessions. It basically has given back all those gains, is technically looking weak again here. So the chart of the GLD is pointing to lower prices, in my opinion, lower prices ahead for gold. We'll see how that plays out, but the technical picture of the GLD looking questionable at best at this point. Crude oil today, 88.91 is the close, up 84 cents on the session. For the week, up 0.7%. For the month, 3.1% gain for oil. All right, we've got fiscal cliff shenanigans going on a daily basis. President Obama hit the road today. He spoke at a toy factory in Pennsylvania, trying to drum up support for his fiscal plan. He said Republicans should extend existing Bush-area tax rates for households earning $250,000 or less, while also allowing increases to kick in for the wealthy. Yesterday after the close, Tim Geithner presented some details of this fiscal plan. White House is seeking $1.6 trillion in tax increases up front, as well as $50 billion in additional stimulus spending. White House also wants a permanent increase in the federal debt ceiling, a 1-year expansion of jobless benefits, and an extension of the payroll tax credit. I got to tell you, the bickering back and forth between Obama and Boehner, I mean, it is troublesome. I don't think these guys like each other. That's my personal opinion. I just don't think they like each other. And to hear Boehner talk, and you can sense the frustration for Obama. But politics aside, it would be nice to think these guys could come to some sort of agreement. But it's a big poker game at this point. I heard somebody say it's a big poker game, and that's exactly what it is. So we'll see how things play out. News from Apple today. Let's take a look at Apple because it's kind of facing the similar challenges as the NASDAQ Composite is, bumping up against resistance here. A couple of resistance levels for Apple. Its 200-day moving average at 596. You can see it rallied back and got pretty much to that 596 level, has been turned away so far. Shares of Apple down $4.89 today to $584.47. There was some news around Apple today. The company announced December launch dates for its iPhone 5 and new iPads in China. The iPhone 5 will go on sale December 14th. Apple also announced that Wi-Fi versions of its iPad mini and 4th generation iPad will be available in China on December 7th. So investors kind of shrugging off that news. Stock is down about 0.8% to $584.47, just like the major averages, trading near its session low at this point. Special dividend parade continued today with Whole Foods Market. You know, I haven't spoken very highly of Whole Foods Market. Love the store. Strong balance sheet. It's a very well-run company, but it's a stock that has made a massive price move over the past 3 years, and it looks like a late-stage base to me. Still looking at short candidates in this market in case the market decides to make a move lower here. Whole Foods is looking vulnerable here. It is on my short list, and we'll see that despite news of a $2 a share special dividend payable to shareholders of record December 10th, payable December 21st to shareholders of record December 10th. $2 special dividend for Whole Foods Market. It has reversed and is now down 17 cents to 92.91 after hitting an intraday high of 94.48. So bottom line, Whole Foods just looks like a tired stock, and it never ceases to amaze me. Talking to people, when a stock is up 400, 500, 700, 900, 1,000%. I mean, there are some examples of stocks that are up more than 1,500% over the past 3 years since the start of the bull in March 2009, and people don't really like to pay attention to that. They like the company, they see good solid earnings growth, and they see a good balance sheet, and they see a lot of strong fundamental metrics, but that's really one of the first things I look at when I buy growth stocks, or when I put out a recommendation for my Ultimate Growth Stocks model portfolio. I always look at a weekly chart and just see where has the stock been. And, a name like Whole Foods, Ulta Beauty, there's just Lululemon, there's a whole bunch of them. And we'll touch on Ulta Beauty and Lululemon in just a little bit, but just many big market winners over the past 3 years that just are starting to look a little bit tired, and no big stock move lasts forever. So the trick when buying growth stocks is not only focusing on growth names with strong fundamentals and that are showing relative price strength, but the ultimate goal is to get them in the early stages of a move rather than the later stages. That may seem obvious, but it's not to some out there. But you never want to chase, and always use a weekly chart to so you can see what kind of percentage gain the stock has made already. All right, folks, happy Friday. Headed into break number 1. We'll be back in about 3 to 4 minutes. Ken Shreve with you on Breakout Investing. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Taking a look at some other headline stocks today. How about that move in Yum Brands? Not very yummy. Yum Brands, of course, known for Kentucky Fried Chicken, Pizza Hut, Taco Bell, all under one umbrella, which is Yum Brands. They came out and warned of sluggish fourth quarter sales at its restaurants in China. In the third quarter, Yum derived more than half of its revenue and operating profit from China, so not surprising to see the stock crater today, down 10% to 67.03. Yum now expects sales at restaurants open at least a year to fall about 4% in the fourth quarter. I believe, I didn't write down what the estimate was, but I think it was low single-digit 1 or 2% growth. So pretty soft guidance for the fourth quarter from Yum Brands, and the stock is down sharply today. Also, Zynga, don't follow the stock too much, but it was in the news today because apparently its long-standing relationship with Facebook has been altered, modified. The companies are kind of loosening up the parameters of the relationship. Shares of Zynga hit an intraday low today of 237. It is now trading at 248, down about 5.3%, only 14 cents, and you can see it's trading up near its session high after early weakness. But basically the details are that Zynga will now be able to host its web games outside of Facebook's platform. Zynga will no longer have to display Facebook ads or use Facebook payments on its own properties like Zynga.com. And also part of this amended agreement, Facebook will now be able to develop its own games. I don't think they have any plans of doing that in the near term, but they'll be able to develop their own games at the end of March next year. Its former agreement with Zynga prohibited Facebook from developing games. So this is really about Zynga becoming less reliant on Facebook. It may not be such a bad thing. There was a piece in the Wall Street Journal today saying that this actually may be good for Zynga. They're going to be able to go out and pursue new areas of growth, perhaps in mobile. But they do make a lot of cool games. They have... I know Farmville is popular. They've got a good poker game. So a lot of popular games that before you had to log into Facebook to play, but that's going to be changing very soon. Another big mover to the downside today. Let's take a look at VeriSign, VRSN. Big drop for that stock today. The federal government basically cleared the company to manage the databases that house .com domain names for another 6 years. So that's good news, but VeriSign won't be allowed to raise prices without approval. And investors took that as not the best of news. And shares of VeriSign really taking a hit today, down 13.7% to $33.95. And certainly there were sell signals in VeriSign before today's drop. It really, you see signs of institutional selling in VeriSign for quite some time. It had a big gap down on October 26th. On this day here, gaps below its 200-day moving average, tries to rally back above the 200-day line, fails. You can see this reversal here on November 13th, where it closes near its lows and then boom, back underneath its 200, and the bottom falls out today. So this is a broken stock. May look like it's on sale because back in September, October, it was a $49 stock. Now at $33.95, but no thanks. I'm not gonna touch this one. We did have some economic data earlier today to end the week. Personal income and spending. Income's flat, a little disappointing. The estimate was for income growth of 0.2%. Spending also disappointing, down 0.2%. Economists were looking for a gain of 0.1%. So not great news in terms of personal income and spending. That's generally not market moving data. Chicago Purchasing Managers Index for November comes in at 50.4, mostly in line with expectations. It is now in expansion mode after registering a 49.9 reading in October. So we'll have more manufacturing data to look at next week, but let's take a look at some earnings reports. Ulta Beauty. This is again one of these big movers. Ulta has made a 1,500% move, a little more than 1,500% since March 2009. That has not stopped the stock from jumping 7.4% today to $100.04. What you have here is basically a stock that is still building the right side of a base. So I know some people are getting in here and buying today. I'm going to take a pass on this one as one because it's not breaking out of a base. It still has its prior high of 103.52 to deal with. But give Ulta credit for a strong quarter and a lot of big buyers in the stock today. And so we'll watch how this one does, and we'll go over the details of their earnings report when we come back. We'll do that very soon. Stick with me. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Happy Friday. It's been a pretty good week. A lot of shenanigans on Capitol Hill. But so far, this market uptrend, I know there are a lot of skeptics out there. And, yeah, I mean, there's reason to not be overly trusting of this rally. But then again, we don't want to argue with the market either. So I think it's okay to be putting on some long positions here, but nothing too aggressive. I think favoring cash is still a good idea, but nibble at some names with strong fundamentals and technicals. That's what I've been doing for the Ultimate Growth Stocks model portfolio, and really so far so good. I'm not really disappointed with the way any of the charts look that I've recently bought. Many are holding above buy points and showing absolutely nothing in the way of sell signals. So so that's a good thing. All right, talking about Ulta Beauty, stock that since March 2009 is up some 1,500%, in a late stage move here, trying to work on the right side of another base. It's formed a series of bases over the past 3.5 years or so. And give the stock credit, it is up 7.4% today on pretty nice earnings. And there's still a growth story going on at Ulta Beauty. They are still expanding. They're still growing annual earnings nicely. Ulta is expected to grow fiscal 2013 profit by 37% compared to fiscal 2012, and fiscal 2014 expected to be up 26%. So this is a high multiple stock in the retail sector, but certainly worthy of a high multiple because of its rapid growth and very consistent track record of growth as well. Sales were up 22% to $505.6 million. That was slightly better than expectations, and they beat the consensus estimate by 3 cents with profit of 59 cents a share, up 40% from a year ago. Same-store sales up 8.4%. So all around pretty good. Their earnings guidance for fiscal 2013 was slightly better than expected. It wasn't a huge raise, but just a slight raise on annual earnings guidance. And for the current quarter, they guided pretty much in line. So, but you know, the stock is rallying. Short interest not that high in Alta. This is not so much a big short squeeze. Who knows? It could be some new money coming into the stock as well. Another big mover in the retail sector is Five Below. This is a company that came public in July at $17 a share. Small cap with a market cap of $1.9 billion. But look at the monster move Five Below is making today, up $6.15, almost 20% to $37.54. I'll tell you what, this is one to keep an eye on because it is in the process of building a first stage IPO base. It again came public in July at 17. It's trading at 37.54. Still has a high of just over 38. Actually, it's $40 that it has to get through, but major accumulation in the stock going on today. Bright growth prospects here. This is a store that caters to the teen crowd and children. They have a big presence on the East Coast, but their earnings were pretty good, up 200% from a year ago to 3 cents a share, 2 cents better than Views. Sales were up 40% to $86.6 million. That was nicely above the consensus estimate as well, and same-store sales up an impressive 8.8%. So new issues like this can present great opportunities. You have to be patient with them. So far, it's been a straight move up off the bottom. The stock did not look good headed into this week. Buying demand had completely dried up, but the earnings report apparently turned a lot of heads. It's working on a 3-session winning streak here, and 3 sessions ago, don't forget, this was a $28 stock, and it's now at $37.54. So I wouldn't chase it up here. Normally when you get a big move like this, you'll see some profit taking. Maybe you get a little handle area that forms, get a little cup with handle pattern, and then, you know, a heavy volume breakout. So I'm not a buyer here, but I think there's an intriguing growth story at Five Below, plus the fact that it's a new issue and could easily still be in the early stages of growth. Let's take a look at SPLK, Splunk, kind of a funny company name. This is a provider of data analytics software. It had an IPO in April earlier this year at $17 a share. It's trading at $29.95, kind of a big intraday trading range today. Hits a low of $28.10, a high of $30.92, down 3 cents right now to $29.95. This is a company that is not profitable yet, but you know, they're adding a lot of customers, and their product, their software is in strong demand, no doubt about it. I think I saw they added 350 new enterprise customers in the third quarter. I know Kohl's was one of them, but they lost 1 cent a share. That was better than the consensus estimate for a loss of 2 cents. Sales up 67% to $52 million. So this is a small cap. It's not a what I would consider a liquid institutional quality name, but and it's still deep inside a base, so it's not buyable here. But it's an interesting company with an interesting product that seems to be enjoying you know, pretty good demand, but at 24% off its high, not going to be on my radar until I see continued signs of institutional buying and it gets closer to that former high around 38. So has a long road ahead, but if they continue to execute like they have been, not out of the question. Market cap for Splunk of $2.9 billion. Other earnings reports, let's take a look at UNFI, United Natural Foods. They made 40 cents a share, basically in line with expectations, up 15% from a year ago. Sales of $1.4 billion, also in line. This is kind of a laggard stock here. trying to firm up at its 200-day moving average, not having much luck at all. Down 18 cents today on the news to 51.89. And finally, Genesco, GCO. This is a footwear and apparel retailer. Earnings up 19% to $1.44. That was about 11 cents above view. Sales up 8% to $664.5 million. The company did say their fourth quarter got off to a slow start. A lot of companies talking about Hurricane Sandy, and rightly so. I mean, when Hurricane Sandy hit, it did affect business at a lot of companies, and it also affected economic data for sure. But shares of Genesco today down 8.6% to 55.36. Investors did not like to hear the company say that the fourth quarter got off to a slow start, apparently. All right, let's talk about some good charts in the market here. I've had been pronouncing this company Qihu 360. Apparently it's Qihu. Qihu 360-degree technology. We've talked about this name in the past, but I like the technical setup here, and I still think this one has great potential. It has a lot of qualities that I like to see as stock, so it's not out of the question that this is a name that at some point could be in the Ultimate Growth Stocks model portfolio. Still under accumulation, trying for a breakout here over 25.50. Market is not letting it run yet, but I just like the relative price strength it's showing. This is a company based in China. They provide internet and mobile security products, and they also launched their own search engine called So.com, which has turned into be quite the thorn in Baidu's side. So is quickly grabbing market share in search share in China, and its chart looks pretty good here, and wouldn't be surprised if this market can get going here. Let's look at a weekly chart. We'll see what a bullish technical setup looks like. Here is Qihu 360 technology. You can see it's just at the top of a long base here, and really looking at this 25.50 thereabouts. That's going to be your swing point. Working on 5 straight gains here, showing some accumulation. I like the look of this stock, and I think it has potential. Another name moving today, FDO. Didn't see any news, but let's take a look at Family Dollar stores. Good breakout for the stock today, recently over $70.17 a share. That was the swing point. And at $71.25, you know what? The train has not left the station here. You're still looking at a stock that's within buying range. You have sales growth accelerating in recent quarters at FDO, so kind of a decent looking chart out here. Another stock that is working on 6 straight weekly price gains. Not a whole lot of volume behind the recent move, so that's a bit of a concern. You can always find little things wrong with the chart. You look back over the past 6 weeks when it's been slowly, steadily moving higher. It has not. There just hasn't been a whole lot of volume in the stock. So, but still a pretty strong balance sheet here at Family Dollar stores. Again, sales accelerating in recent quarters, 8%, 9%, 10%, 11%. That's always a good sign. And they should be able to grow annual earnings by about 15% over the next couple of years or so. So you can see FDO right now up 1.2% to 71.25. Again, still within buying range. The swing point here was 70.17, but you're looking at a breakout that's happening, and volume has been good but not great. Good but not great, and in a low volume time during the market, maybe it's actually not too bad. But I'm holding off for now. I've got 4 or 5 stocks in the model portfolio. But this is another technical setup that looks interesting in this market. Another name that looks good, we've been talking about Rackspace Hosting, ticker RAX, like the technical setup here. Problem with Racks, similar with Family Dollar, just not seeing a whole lot of volume. I think it was Wednesday. It made a nice move. It actually cleared a 67.18 swing point. Volume, that was on this day right here, volume was just slightly above average. So this is a stock that I'm still waiting for more meaningful signs of accumulation. What I'd love to see Rackspace do is just drift lower in light volume. We could see the major averages do that. Again, S&P 500 and NASDAQ kind of bumping up against resistance here. If we get some lower volume declines in the major averages, we could see a lot of these stocks setting up start to decline in light volume, and sometimes that can pave the way for nice breakouts. So Rackspace looks very, very good here, and you're going to hear about Rackspace. It's always been a high multiple stock. That has never concerned me because this is a company that is growing earnings rapidly, and that growth is expected to continue not only for the rest of this year but into 2013 as well. You're looking at 45% growth over the next 2 years. So sometimes high multiple stocks, that growth rate or those multiples are justified because of just tremendous growth rates by the company. So Rackspace looking pretty good here. This is a cloud computing play. Cloud computing services are not a big part of their revenue yet. Their big lion's share of revenue still comes from managing web-based IT systems for small and medium-sized businesses, but they're going after some large customers as well, and I think the stock has very good potential. Mentioned BE Aerospace, BEAV, another solid performer here. This is a stock it's been up multiple days in a row, and it looks extended, but the bottom line is that the swing point for BE Aerospace, let me get that for you. It broke out over 46.18. Okay, so that's the swing point right here, late October, early November. And, it looks like it's come straight up off the bottom. It broke out. Volume has been pretty good. But at 47.35, it's only 2.5–3% above that swing point. So to me, this one is again, what an example of a stock that's not extended looks like. Sometimes a stock breaks out, runs too far, too fast. You don't want to chase it. I don't think you're chasing BE Aerospace here because it's only 2.5–3% above the swing point. This is a company that makes commercial aircraft, business jet cabin, interior products. And I do have a weekly chart for BE Aerospace, and what you do see here is just a nice symmetrical breakout from a cup with handle base. Here's the swing point, handle area, nice looking breakout on the weekly chart. According to the rules I follow, this one looks pretty good. Talked about recent price strength in Regeneron Pharmaceuticals. This is a name that I did have in the Ultimate Growth Stocks model portfolio, and I had it back in this area August, September, October. Sold it for a decent gain, and I was feeling pretty smart when the stock corrected from 165 down to about 140 thereabouts, and then boom, boy, has it just jumped up off the bottom. Earlier this week, the company did receive European Union approval for its eye drug Eylea, which is used to treat wet age-related macular degeneration, which is a common disease that causes blindness in the elderly. Regeneron down $7.29 today, 3.9% to 180.45. Mentioned during yesterday's show that it's very extended from a recent breakout over 166.39. So if you were buying yesterday, you were buying an extended stock, and with today's decline, I would just kind of let this thing pause, take a breather, wait for a better entry point. All right, I want to take a look at some of these 3D printing firms. They are been a lot of talk about them. Fundamentals are solid. 3D Systems under pressure, under quite a bit of pressure for the second day in a row, down 4.8% to 44.87. Stocks like this that just trade all over the place, you just can't sleep at night owning these things. They're tough stocks to own. So if I can buy a growth stock that keeps its price swings on a tight leash, that's much more preferable to owning a volatile name like 3D Systems. But under a lot of pressure today, 4.8% to 44.87. And quickly, we'll check in on Stratasys. Stratasys under pressure as well, down 2.8% to 74.87. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Almost 5 minutes left to go in Friday's session. Hope you all have big weekend plans. I've got 2 poker tournaments this weekend. One tonight, one tomorrow night. 2 fundraisers happy to be a part of. So wish me luck. I'll be playing poker just like the politicians are on Capitol Hill. But this is a more fun type of poker. Texas Hold'em tonight and tomorrow night. Nice little rally for the indices heading into the close here. This is, boy, this market is acting strong. The NASDAQ composite pretty much unchanged here after hitting an intraday low of 29.99. It is now trading around 3,012, up near its session high. S&P 500, I assume this one's doing the same thing. It is now up a little more than 2 points to 1418. Still looking at that 50-day simple moving average as a resistance level, but a nice rally into the close here. Just when you thought you'd get a finish near lows today, we're getting a nice bounce for the markets. with about 5 minutes left to go. Mentioned volume. Volume has not been heavy all day, tracking about 4% lighter right now on the NASDAQ when compared to Thursday's level. NYSE volume about 13% lighter than Thursday. Checking in on the Dow, up 23 points to 13,045, looking to extend its winning streak to 3 sessions. Mentioned the special dividend, special $2 a share dividend for Whole Foods Market, a stock that is looking vulnerable to me. I mean, if this market keeps going, there are some names I want to be in and some names that I don't. Whole Foods is not a name I want to be in. This is a stock that looks tired to me, stock that is up 665% since the bull market started in March 2009. Another name that is looking very tired to me is a Tractor Supply. They operate farming equipment retail stores across the country. Tosco, very, very tired here. Look at that resistance at the 200-day moving average. This is on one of my short watch lists here. Tractor Supply looking quite vulnerable. Again, a stock that's up 473% since the start of the bull market. And to a lesser extent, this one has not completely broken down yet, but it is looking vulnerable. Under Armour outperforming dramatically today, down 3.4% to 52. Look at the resistance at the 50-day moving average. This is a stock that is up more than 600% since the start of the bull market. So a big criteria that I use for at least putting a watch list of short ideas together is looking at weekly charts and saying, okay, where are the late stage bases out there? Which are the growth stocks that have made incredible moves, that have rewarded shareholders richly since the start of the bull market? There are a lot of them out there. A lot of these stocks are not going to lead the next bull run. And again, I'm going to put Whole Foods on that list. I'm going to put Tractor Supply on that list. There are others as well, to a lesser extent Under Armour, but still, a 600+% gain since March 2009, and showing bearish action today. Tried to reclaim its 50-day moving average this week, turned away with conviction. So another stock that is looking tired. All right, coming up next week, you believe it, we've got another jobs report. I don't have the estimate data for what job growth is supposed to look like, but in October, non-farm payrolls rose 171,000, up from an upwardly revised 148,000 in September. Unemployment rate currently at 7.9%. Hopefully we get some good news next week from the jobs report. And then a couple of earnings reports, nothing big. Luxury home builder Toll Brothers on Tuesday, and we get Lululemon Athletica on Thursday. Coming up next, the Tom O'Brien Show. Have a great weekend, everyone. Always appreciate you listening. I'll be back Monday with another edition of Breakout Investing. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.